Welcome to our deep dive into the world of digital currency, a realm that is challenging the traditional norms of finance and economy. If you've ever been intrigued by terms like Bitcoin, blockchain, or cryptocurrency, this video is tailor-made for you. We'll journey through the flawed modern financial system, explore the emergence of Bitcoin, and delve into its unique monetary policy. We'll weigh the advantages and risks of this digital currency and speculate on what it might mean for the future of money. Whether you're a finance enthusiast, a tech geek, or just curious about this game-changing digital asset, stay tuned. And of course, if you find this content valuable, don't forget to hit the subscribe button and give this video a thumbs up. Let's dive into the exciting world of Bitcoin. Ever wondered why your money seems to buy less and less each year? That's inflation for you, the silent thief that continually erodes the value of your hard-earned cash. It's one of the glaring flaws in our modern financial system. Now, let's add to that economic inequality. The rich getting richer, the poor getting poorer, and the middle class being squeezed out. Our current system perpetuates this gap, making it difficult for many to break free from the cycle of financial struggle. Then there's the issue of central banks. These entities control the money supply, essentially deciding the value of your money. But who watches the watchman? When power is centralized, it opens the door to potential abuses and financial crises. Finally, consider the risk of financial crises due to this centralized control. The 2008 financial crash? That's a prime example. That's just the tip of the iceberg when it comes to the flaws in our current financial system. In 2008, an anonymous figure known as Satoshi Nakamoto introduced a new kind of money, Bitcoin. This was no ordinary currency, it was a digital decentralized form of cash that emerged in the aftermath of the 2008 financial crisis, a time when faith in traditional financial institutions was shaken to its core. What made Bitcoin unique was its decentralized nature. It wasn't controlled by a central bank or government, but by a network of computers spread across the globe. Satoshi Nakamoto unveiled this concept in a white paper titled Bitcoin, a peer-to-peer electronic cash system. And then, on the 3rd of January 2009, the first block of Bitcoin transactions, known as the Genesis block, was mined. It was a bold and symbolic act, marking the dawn of a new era in the world of finance. Decentralized, transparent, and open to all, Bitcoin was born. Thus, Bitcoin emerged as a potential alternative to the flawed financial system. Bitcoin operates on a unique monetary policy unlike anything in our current system. Picture the gold mining industry. Now imagine if every 4 years, half as much gold was discovered as the previous 4. This is akin to Bitcoin's halving, a mechanism that slices the reward for mining new blocks in half approximately every 4 years. This ingenious design progressively reduces the rate of new Bitcoin creation, introducing a deflationary effect. Contrast this with the traditional currencies we're used to. Central banks can print more money when they deem it necessary, leading to inflation. Bitcoin's supply, on the other hand, is capped at 21 million coins, and the halving ensures that the last Bitcoin won't be mined until around the year 2140. This scarcity and predictable monetary policy give Bitcoin its deflationary characteristic. This unique monetary policy is one of the reasons why Bitcoin is considered digital gold. While Bitcoin offers many advantages, it also comes with its own set of risks. On one hand, Bitcoin boasts potential for high returns. Its meteoric rise in value has made many early adopters incredibly wealthy. Beyond that, it's seen as a hedge against inflation, a digital gold if you will. With central banks around the world printing money, Bitcoin's hard cap of 21 million coins makes it an attractive asset. Moreover, Bitcoin offers the potential for financial freedom. It's decentralized, meaning no government or institution controls it. This makes it a powerful tool for those living under oppressive regimes or unstable economies. However, Bitcoin is not without its risks. Its price is highly volatile, swinging wildly in short periods. Regulatory uncertainties also loom, as governments grapple with its implications. Lastly, Bitcoin's anonymous nature can lead to misuse, making it a potential tool for illicit activities. As with any investment, it's crucial to do your own research and understand these risks before diving in. So is Bitcoin the future of money? Let's dive into that. In the world of finance, Bitcoin and other cryptocurrencies have been causing quite a stir. They're not just digital assets anymore. They're potential game changers, poised to revolutionize our financial system. One of the key issues with the current system is financial exclusion. Around the globe, there are billions of unbanked or underbanked individuals. Enter Bitcoin, With just a smartphone and an internet connection, anyone can have access to a bank right in their pocket. Then there's inflation. In economies where inflation rates are high, the value of money can erode quickly. Bitcoin, with its capped supply of 21 million, could offer a solution to this issue. However, it's important to remember that the future is unpredictable. The potential is there, but so are the challenges. Only time will tell if Bitcoin becomes the money of the future, but one thing's for sure, it's already changing the way we think about money